1000.5% 1.5%. 3000.5% plus 0.5%. DXY 98.5098.80. TI 95.0098.00. DXY 98.80. /CH. N. Good evening, and welcome to our market analysis. Friday's trading session presented a fascinating, yet somewhat concerning, picture. The U.S. equity market displayed significant divergence, with the Nasdaq Composite surging a strong 1.63% and the S&P 500 closing up 0.8%. However, the Dow Jones Industrial Average actually edged down 0.16%. This indicates an extremely concentrated capital flow, suggesting a market dynamic that could be characterized as a bull trap reversal. Despite the VIX, the fear gauge, retreating slightly to 18.71, the underlying optimism seems to mask considerable structural risks. The capital flow narrative was exceptionally clear. Funds decisively moved out of defensive sectors and safe haven assets, funneling with extreme concentration into technology stocks, particularly semiconductors and AI-related names, as well as certain commodities like energy. Looking at the global path, Asian markets on Friday showed weakness. Major A-share indices generally closed lower, with the Shanghai Composite down 0.33% and the Chi-Next Index falling 1.41%. Investor sentiment was distinctly cautious, entirely failing to absorb the prior day's U.S. optimism. The market continued its own weak adjustment rhythm, showing no signs of a turning point. The U.S. market, however, was the core of Friday's global sentiment. After the open, the market briefly wavered, digesting geopolitical tensions and inflation concerns. But then, led by technology stocks, especially the semiconductor sector, investor sentiment quickly turned extremely optimistic. Intel's robust earnings report and Nvidia's continued ascent ignited the market, propelling the Nasdaq and S&P 500 to strong gains and new all-time highs, completely reversing the pessimism seen in Asian markets earlier. It's fair to say that the U.S. market, particularly its technology sector, served as the turning point and the emotional leader of the day. Meanwhile, Asian markets, especially A-shares, along with defensive sectors within the U.S. market, acted as a drag. From an expectation gap perspective, the market remarkably ignored multiple headwinds. Escalating geopolitical tensions in the Middle East, a more than 2% rise in WTI crude oil prices to $96.37, signaling inflationary pressure, and U.S. consumer confidence hitting an all-time low, all these were largely brushed aside. This collective disregard